Mira Business FM.
It's the Morning Drive with me, Tim Elliott, here on Mira Business FM, live on the website, mirabusiness.fm. Listen, watch live on YouTube, the stream on Twitch. You'll find us also on Rumble, Daily Motion. X is where the news is. We're on Insta for your Reels, and Facebook and LinkedIn and more. Info at mira.fm and whatsapp.mira.fm to contact us in the studio. As always, a thumbs up and a like is much appreciated. Now, time to talk personal finance and investing. Really, Muzammil Shaikh is here. He's our tech and investing guy. I'm going to try and introduce you, Muzammil, in every week in a completely different way. So this week, you're the tech and investing guy. Mm-hmm. Welcome. It's nice to see you. Hello. Without naming any names, for now, I guess, let's look at what to look for to take your investment planning and journey further. The kinds of questions you need to ask, the kinds of things you need to be aware of, how to choose a brokerage. The thing with this, I think, to start with is if you're at that point in your investing journey, you've taken care of the savings, the school fees are fine, the rent, the mortgage is fine, the car's being paid up and everything else. You're in that place where you're like, investing is the next thing. It's kind of daunting, isn't it? Because this is down to you to make the decisions, to research the market. It's something you need to be, I think where I'm going is you need to be ready to jump in.
Yes, so like you said, everything is set up, and don't forget the emergency fund.
Yeah.
And the emergency fund depends mostly on your career path, where you are in life, and the market.
Yeah.
So you could be the best qualified person in the world, but if the market doesn't care for you, you could be out of income. I use the word income, not job.
Yeah.
For even 2 years, maybe, who knows, 3 years. So there's some people I know that they were teachers where they would keep 3-year emergency funds because they were insecure, plus they were actually insecure that maybe they might need it. And they did in some cases, it depends.
I mean, actually, before we go any further, that's an important point, isn't it? Because things do happen to markets, things happen to people, illness happens to people, and there are some illnesses that may keep you out of action for a week or for a year. So, that the thinking and that planning ahead and the emergency fund thing is not just, as you say, don't forget it, and you outline why you shouldn't, but actually it is a really key thing in financial planning.
Absolutely, and insurance is one thing. Just not to go too off track because that's a different topic and it needs its own time.
Sure.
Rightly so.
Sure.
Because people's portfolios have been wiped out because of illness, and they say insurance is your downside protection, effectively, because you can have a lot of money in the world, but if you're in a jurisdiction where medical costs are high, how much are you going to clip your portfolio until it could be millions? That the healthcare cost could be very high, insurance running out. So that's a different area, but it's required to be taken. Even if you're in good health, things can happen. So.
Well, that's exactly right. It's funny, I've said this many times before, but I think it always hits me as being so important. A very wise man once said to me, a financial advisor said to me, look, because I was like, I can't afford this, I don't want to do that. I was kind of refusing things. And he said, look, insurance is a total waste of money until you need it.
Right.
And it really hit me at that point that actually, okay, maybe you're right. I need to grow up.
One way of looking at it is also if you take the money for insurance and let's say you allocate less to it, but you go towards your family's health. Let's say you get them a trainer, you go for a gym, you go for better food. That's also one way of looking at it.
Sure.
Instead of just saying, okay, I'm just going to enjoy life and mess up my body and then the insurance will take care of it.
Sure.
Some people, and I look at it the other way, that why don't we allocate resources less on insurance, more on living well, doing well, being fit, right? Because money is money, right? Like I said, that money is gone. At least this money, you're consuming it for your health and your family's health. It could be some gym items for home or gym membership, or depending on where you are.
It's interesting that, because your attitude is almost more philosophical in some ways. It's a kind of different approach. We were talking yesterday to a doctor on this program, and I asked her, look, there is a shift now towards longevity and regular checkups rather than treating symptoms once something has happened, and that's really a trend in obviously in healthcare, I suppose, but it's an attitude change that we need to have in healthcare, and you could argue we need an attitude change towards financial matters.
So once you have all that set up, how do you start doing that? Is basically the first thing you can do is just whatever you have in mind or someone told you is that go check them out if they are locally regulated or not. That's the first thing you can do. But that doesn't mean they are good, by the way. License doesn't mean they're really good or something like that. Some people misunderstand that, okay, they have a license, they're fully regulated. Second thing you can do is, okay, what about their fees? How much are they charging? Third thing is like check the reviews. That's the easiest thing. Are you getting a lot of information from Reddit and other places and other sites, and or is it just ads, or are you seeing complaints? What's going on? So those are the easiest things you can do when you are using whatever AI tool, or if you're searching on Google or whatever. The easiest steps. The next is understanding the landscape, which means that the lowest cost of the brokerages, which are the tools required to invest in the financial markets, are usually the standalone ones, not attached to a bank. So the bank brokerages have different fee structures. They are more of like a supermarket suite of things where you pay a little bit extra, and there is the apparent psychological relief that you are attached to a bank. Some people assume it's a better thing, not necessarily. The structures, because even if you're using a brokerage, the money is not held with the brokerage, by the way. The money portion of it is always held custodied with the bank. It's never the brokerage themselves unless they have a banking license in the jurisdiction they're operating in.
Okay, so that's a good thing to remember. So questions you need to be asking before you even decide which brokerage is for you. And really, what you're saying there is that it is a question of doing your own due diligence, your own research.
A little bit. You have to do that because in this space, unless you are in the developed markets, the advice given is usually sales-based versus fee-based, where if you go to a fee-based advisor, they will say, hey, if you talk to me for 1 hour, this is the fee you will pay me, which might be maybe a big amount for you, but not that big, to be honest. It's not that big. But you will get more neutral advice from them, because, or you might not. If they should disclose, because that's the whole point, that, okay, I'm associated with a certain brokerage or a firm or a fund, I get a fee if you buy this. That should be disclosed. But there are no rules around it in the UAE versus the US, where there are rules around all of these disclosures. And maybe if you're watching CNBC, Bloomberg, or Fox Business, you will see that whenever an analyst comes on screen, there's a box which says owns the equity, yes or no, tick box. Family owns it, yes or no. Firms own it, yes or no. That's a compliance function.
Yeah.
It's a compliance function. You will not see that happen here at all. So if I'm suggesting something, the ethical ones do say that, okay, yes, I have a referral link there, which will give them some ongoing revenue, not from your sake, from the source side, right?
Yeah.
So also there's something new that has come up recently, is the digital asset space, where people are more and more going towards how do I buy Bitcoin or something, or who is a regulated person here. And there are a lot of regulated entities now operating in the UAE. Banks are also now offering it. Like some banks have started offering as well directly via their partner programs. So that should also be taken into consideration. Those days of running around chasing the offshore exchanges are gone quite a bit, and it's a nice development that has taken place.
Okay, so let's just move kind of backwards but move forwards at the same time. It's an oxymoron, I know, but just define, what is a broker? What is a brokerage? When you've decided to make this step of making your own investment decisions and you're looking for that brokerage, just define.
So structurally, what they do is, their job is to onboard a client via the KYC function, and they will follow the laws of the land. And then they will have to also follow the laws of the land where they are operating in. Let's say you're buying securities or equities or bonds or whatever in the other regions. They have to follow those laws as well, because obviously those assets belong to that region. That's the first step, much like a bank. Secondly, their job is the structure is, there are a couple of things they're doing. They're also taking your money, and they have a partner bank, which they will, that fiat money is held in that bank for that moment until you utilize it. From that moment onwards, you may choose to buy an ETF or stock or exchange traded fund or whatever, or whatever asset, Bitcoin, whatever. From that moment, they will initiate. Their function is to talk to the exchanges. They are not an exchange themselves, by the way. They are a broker, right? They are the broker platform.
They're a middleman.
They are a middleman. They're serving a very important purpose. Some of them are very good. They're very low cost. They're not evil at all. And what they do is they talk to, in the world of classic legacy finance, they talk to the New York Stock Exchange or the Karachi Stock Exchange or the Bombay Stock Exchange, Hong Kong exchanges, and they have direct buying and selling access to them where you can initiate trades on that exchange during the trading hours. So they are the facilitating function on that because they have the licenses to talk to them.
Yeah.
That's their function. And some of them are also doing market making, which is the tricky part. What is market making? That's where they take a cut off the trade without telling you, which is called payment for order flow in the US, which is disclosed over there, but there's no such disclosure in this part of the world. So what does that mean? Oh yeah, zero fees, low fees, but they're getting a cut from somewhere, right?
Yeah.
Versus the good ones, like in the US, they would say, nope, nothing, we don't take anything. It's just a commission based. Because we are so big, we don't need to. The commission themselves are enough for us. So this is the two worlds they're living in. The fee structures around them are important. Some of them are percentages based. Some of them are fixed dollar amounts. So depending on the size of the trade, you would do the calculation that is it cheaper for me to do the fixed amount versus the percentages amount. And there's a cap on them also. So it's not that like it's an endless thing. So that's the gist of it.
Okay, so you go to your broker.
There's one last thing. They are also holding the stocks in something which is called the street name, in their name, but it is your asset, but it's held under their name for convenience and efficiency reasons. Because people think, oh, who's actually owning it? Where does my share hold, right? Well, who is? It's not like a bank. It's not. So if you want to take custody of it, there's a different process for it where you will remove it from the exchange and you will hold it in a different entity, which is just like a bank, but not really a bank, where your shares are held, and they cannot be traded from there. You have to remove them again, send it to an exchange to do that.
So that's held in what's known as a brokerage account.
Yeah, that's a brokerage, and if you want to remove it, and have self-custody in some sorts, there's no such thing in the self-custody, by the way, in the fiat world. But if you want to do self-custody of them, there's a different entity, which is like a depository for shareholding. It exists in every region of the world, and that's not an exchange. So that's the related function to it. So.
Okay, so it's all quite technical, really, isn't it?
That's the underlying.
You need to do your homework.
No, they won't. Not really, because it's just how it works. And because we're here, that's our job, that we are explaining how it works. Most people don't know how it works. Even the people who are suggesting the exchanges, they don't bother to check because the underlying mechanics of things involved and how the money is moved and how the shares are bought and and there's also something called the settlement time. Settlement time is when you buy something, it's not you cannot have it immediately. It takes trade plus 1 day or trade plus 2 days depending on the region. So that's the settlement time.
Okay, so how long have you been doing this? How long has this been an interest of yours?
I believe I stumbled onto it since 2017 onwards, DIY myself. And then as I started learning and making mistakes, I thought, okay, why don't I get my friends and family invested into this? And then my purpose was to understand what was going on Bloomberg. Like when you look at the screen, what's really going on? Why are they, and what is their manic fixation with the Federal Reserve all the time?
Yeah.
So now I get it, because the Fed moves the market by contracting or expanding the money supply. That's why the Fed matters. But if you start investing, you think, I just want to, why aren't they talking about my favorite stock or a fund? That's the reason, because they talk more about macro. And if they talk too much about anything, that becomes a suggestion or a recommendation. That's the danger I learned, that you can even suggest the best asset in the world to anyone, but people will make mistakes and panic sell it or panic buy it even in the wrong time, and then they will suffer that, thinking that they're suffering. So the mindset piece is the first thing people should realize, that as a person, you see some people on the road driving, cutting lanes and even traffic jams. They're trying to get ahead. I call them traders. That's what traders do. Buy, sell, buy, sell. Maybe they're getting ahead, but they don't get ahead. You see them in the same, you're just behind you or front of you at the signal, right? Next signal. So
it's
worse as an investor. So.
Yeah, I can see the comparison. I can. It's interesting this, because markets are so much about, and I think we look at the markets as this kind of, I don't know, building monolith. It's a thing, isn't it? But markets are so much about people and how people feel.
Markets are people. it's a one giant. By the markets are the participants, they're called market participants.
Yeah.
And the participants can be even, you would say, oh, I'm just one person, but one person together collectively operating, me, for example, or you, are making a difference in a group. And you might think, okay, we don't have much capital, but there have been cases where the hedge funds were destroyed by the Reddit group and Wall Street Bets and all of that. So where they banded together and they found the hole in a market and they went for it, which was the GameStop incident, where they found a place which was extremely shorted. And then you think that, okay, you're not one person, but that's what the case where the retail crowd outmatched and they outperformed everyone in that case, in that moment.
So you're at the point where you're going to choose a brokerage. You've looked at fees. Are there any hidden charges, trading fees, I don't know, account maintenance costs, that kinds of things, and you've decided on a particular brokerage. Is there anything else you should be thinking about before you decide to jump in? You think fees are okay. I don't know, things like account minimums, research tools, the app that the particular, because obviously everything's online these days, the app that your particular platform
Your
uses.
nationality, first of all.
Okay.
That's very important.
That's interesting.
And because, like I said, that with some nations using their geopolitical power, you could be deplatformed for not for nothing you did, right? Some nationalities, you could be deplatformed. Example being Syria. Syria recently, the sanctions were lifted and they can now open brokerage accounts.
Right.
So let's say what happens is that brokerage account has a discretion not to onboard you, thinking, okay, yes, I can onboard them. Yes, I can exclude them from US securities, but I don't want the hassle, right? Even though that person might not have ever lived in Syria or whichever sanctioned location. So this is the first unfortunate truth of the situation. Many people have to deal with it. And lately, the factor compliance and the other AML has started affecting even Western Europe as well. In European brokerages have become far more harsh on people living outside of Europe, and they've been deplatforming them. So this is a reality of the situation where be prepared for it. And they've been asking for income funds for many years. What were you doing? What was happening? Because they are basically just saying, we don't want to be fined again. We don't want to be put in that position where we are. So that's one thing to consider. Secondly, basically it's about, even though, what about the exit plan? You might move locations. How would you get your money out? What would be the banking structure route? What if when the money hits your account, how is that going to be treated? That's a tax discussion. I'm not qualified at all for that because the tax structures each one is different. Unless you are living in a tax-free place like the UAE, regarding income tax at least. Yeah. That's an easy discussion to have. But if someone has other nationalities, or they are paying taxes, or they're outside and you become tax resident living outside, then you might be liable. And okay, let's say you're not caught, but there's a back-end reporting happening sometimes, and that might get you caught also. So
I think that any discussions around tax, you need an expert, don't you? You need to be able to be in a position to take advice before you do jump in, certainly from a tax perspective. I guess most of us get our information really from a number of different sources, most of it internet-based in this modern age, of course, so you need to understand where to go, where information is reliable. But if you're using a platform from an established, reputable brokerage, one of the sides is to look at their research tools, to look at what they offer to help you make decisions.
If they're offering you research tools, and if there is no sales component attached to it, that's fine, independent. And in the US, the term they use is called self-directed investor, DIY. Here, there's no terminology like that. So here, usually, if they will detect that your account has exceeded a certain amount, you will be classified as high net worth, and you might be called upon by someone to access. This is the benefit of having a brokerage which is not attached to a bank.
Okay.
Independent, no one knows you, whatever you have. It's a quiet place and privacy-based wise and all that. So that's the benefit. Versus research tools are a tricky thing because the market has a lot of research tools, and you don't have to necessarily follow what the platform is offering you. That's an easy thing to have. You can even pay or less, or pay nothing, or you can do your own research. The filings are free, the S1 filings if you're doing in the US market, or literally going to a place and literally talking to the people, like what the old school way of researching, right? Like what's going on in the world. Like people sometimes use satellite images of seeing construction happening some places, which is, like I said, real data, right?
Yeah.
And you'll be ahead of the curve.
Yeah.
You'll be much ahead of the curve because everyone's buying data from those same places, and you don't have to. You literally stepped out in the world and like saw for yourself what's going on.
Information is information, isn't it, I guess? The other thing you need from your brokerage is you need options. You need to know that you can buy stocks or funds or exchange-traded funds, whatever it is you're looking to get invested in, that you're interested in, you need to know that that's there for you. But also assistance, customer support. I mean, that's an important thing.
It's very important. And some cases, the funny thing is one of the best brokerages doesn't have bad support, but it has slow support. So people get annoyed by that. Also, they're not comfortable with themselves understanding the procedures, and they want some hand-holding to happen at the start of the process. Usually, yes. So customer support will be like, they will never, the first level will be mostly that, okay, I've opened a ticket for you, and then someone will get back to you. That's how it works.
Yeah.
It's never immediate, because the customer support person is never that qualified to help you in that moment. Definitely.
Yeah, I mean and that's the thing. And of course, in markets these days, we are connected all the time. It's 24/7. You need support to be pretty swift.
We had a big sell-off yesterday because of the valuations being stretched in AI and all that. So that's I'm sure there are a lot of calls must be flying around today. And most of the time they can't do anything because you did whatever you did, right? They didn't do anything.
Well, this is true.
And also the calls are related to money transfers, by the way, not to the brokerage themselves. Oh, I sent some money, it didn't reach properly, or I got deductions, and it was always the bank correspondence fees were involved and something like that. UAE is getting better at it, much better, thank God. We are very advanced. In the last few years, to become the cost have come down.
Particularly in the last few years, actually. Yeah, to be fair. Yeah.
Very, very high. And then we are much ahead of the other GCC countries easily.
Yeah, no, that's fair. But it very often is a deduction for some reason. You didn't tick the box of where the fees apply, isn't it? It could be as simple as that.
Also, the banks, because you have to understand, remember we spoke about this, the banks are literally pushing text files around, right? So they will make a mistake. It's not something like the money moving on the Bitcoin blockchain or something. It's not an automated process. There are two independent systems talking to each other, and mistakes happen sometimes.
Yeah, you have to be ready for that. What do you need to look to avoid when you've decided on your brokerage, you're happy with everything, but is there anything that should be a red flag? Is there a warning signal?
Easiest thing, if someone calls you, most likely, it's not a scam, but it's something, these days could be a scam, but of course, first thing, is it a scam? If you screen that out, fine, it's not a scam.
Right.
Is it good for me? Are you capable of screening it out? Don't assume you are. The main thing is that I don't know how to say it. Maybe time or the market will humble you, or life will humble you. Try to not have an ego reaction to something that I need to learn something, and call some people and listen to them without trying to get some kind of conclusion in your head. Keep listening to some people for a while, and then that will present an answer to you, rather than quickly listening to a guru or me even. Let's say if I say something, it's like, okay, there's a saying in the community, in the Bitcoin community, they say don't trust, verify, which means that that's not because of that you don't trust people. I could be wrong, or I could be wrong at that moment, or I could be right in that moment, and later it became something wrong. So that's the reason you recheck data. There's no harm in rechecking something.
You really need to become
attentive.
You're the master of your destiny. Attentive is exactly the right word, actually. You really need to keep abreast of what's going on and keep thinking and keep... you need to be concentrated.
One thing I would say is that don't talk to people who have not done any of this. And there are many of them.
That's probably a good lesson in life.
Yes.
Yeah, to be honest. But I think that's a good point. Does that come from hard experience for you?
It's for any asset class. Don't talk to the property guy who only does property, or don't talk to the stocks guy who only does stocks, doesn't know about property. This way.
Yeah.
So or at least talk to someone who's done all of it, and maybe lost money. Hopefully he lost money in all of it. That's better, because he would have better answers for you.
It's probably a good point. Not that you want people to lose money, but it is where experience comes from. The mistakes.
Yeah, I mean, there's a saying that, remember, I don't know if you heard of it, like we have to touch the hot kettle to remember the lesson, right? That's it.
Yeah, there's a lot of truth in that, isn't there? Don't touch that. Why not? Because it'll hurt, and actually, you probably have to touch it. We got a couple of minutes, Muzammil. Where to invest? Investing in the US, investing in the local market. Decisions like that. Where do they come from? And a lot of it comes from, I guess, where your broker is located, where you're located, your nationality. Does that come into it? What?
Home bias is a danger. Home bias is that it's not a danger because people recognize it's nearby, and also there's a patriotic reason. I want to invest in my economy and all of that.
Sure.
And then there's there's a school where diversification, and over diversification. That's the overused word. I will go on the record and say I don't like over diversification too much because it's the best way to build wealth over a very long period of time.
Sure.
Very long period. It takes a long time.
That's established financial thinking.
If you are a guy that, like, hey, this is not my wheelhouse at all, I don't want to make any effort, you go over diversified and you protect yourself, and eventually.
Okay.
But if you are someone who can make some effort, I would say you should study the market, study how things work. They do work out in some cases, and I remember I said something that about risk appetite versus risk capacity. Understand your risk capacity and take appropriate risks depending on your age. So that may work out in your favor, even though if you go to most places, they will say, what are you suggesting that people take risks? I say, yes, I mean, history is littered with people where they were earlier or later in life and they took risks and they won anyway. So I am of the personal taste that people should continue to take risks. It's not an age thing, or it's not a money thing or lack of money thing. Taking risks means that you're growing and things grow. Yes, you would come down or you would go up and then things will be hurting, right? It's a very specific thing. Anyone who's in this space first need to understand who they are. Are they an anxious person?